Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 4th of October. Now there's a definite sense of mixed risk appetite going on today. We've had equity markets handing over from the Asian session pretty cautious, futures moving lower, but Forex majors are fairly mixed in terms of their outlook. Nothing really too decisive in terms of direction. We had a bit of a kickback against the dollar strength at the back end of last week. Just signs that may be starting to form a bit of support again, but it'll be interesting to see how that develops through what is essentially a very important first week of the month data-wise. We've got all the final PMI data and culminating on Friday with the non-farm payrolls report for the Federal Reserve to give them an idea of exactly whether they're going to taper or not. So markets are fairly cautious, I think, at the moment as we move through into the European session. So with regards to the charts we're looking out for today, well, we're looking at the assessment of cable, which had a bit of a rebound last week, but starting to find resistance around an old key level of support. We're also looking at the oil price. We've got the OPEC Plus decision on production cuts today. Looking at the outlook for oil still looks to be pretty positive at the moment. And finally, we're looking at the SP 500 futures, which has rallied into resistance again, and again it could be starting to falter. So let's have a look at the charts. And on the Infinox MT5 platform, starting off with sterling dollar, and we can see that this rebound that we've had, two positive candles in a row, but is essentially just unwinding that move from oversold. And it's a little bit of a technical rally into resistance. Don't forget, old support becomes new resistance. The old support between 35.70 to 36 figure that we had through July and August is now a basis of resistance, and that's happened on Friday and again today. So how the market reacts around here will be important. We're still in this downtrend phase. I'll go back out one more level. The downtrend that essentially still comes in around about the 37.80 level. So there is still room to unwind that, almost sort of 250 pips of unwind potential. But again, as I say, old support becomes new resistance, and it needs to get back above 36 figure to then start to think about a move towards 37.30 area, but essentially 36 figure is key resistance, and already we're starting to unwind that RSI. It'll be interesting to see how this goes. This 4-hour chart, we're back around levels previously where the RSI has faltered, so this is key resistance territory on cable. Still of the feeling that selling into strength on cable at the moment, but we could still see this rally. It needs to see how that resistance around 35.70 to 36 figure is reacted to. The oil chart is interesting because we've had this bull run higher lows, higher highs, breaking through, zooming out. You can see the importance of this move. It's really strong in the last few weeks, and it's continuing to hold on to that uptrend move. That old breakout level became supportive, interestingly enough, so that was important. And momentum still looks pretty positive at the moment, and the reaction of the last 2 or 3 sessions has been positive as well. But little slight tailing off today. Is this a sign ahead of the OPEC meeting? Well, it's still okay in terms of momentum on the 4-hour chart. I think if you started to see that below 45, maybe you'd start to think maybe this was sort of rolling over and pulling back towards the key support area of around that uptrend, which starts to come in around 78.30, 77.30 is important support area. But yeah, for now, the bulls are still in control of that oil price, and a retest of this 80.80 level of resistance is obviously still there. But essentially, I'm still a little bit concerned as to how far and how hard this can go to the upside before a corrective move is seen. S&P 500, really interesting because old support, again, old support becomes new resistance in the turnover transition. We see that old support that came in around 44.60 area becoming resistance on the rebound. Again, look at this, old support of the move higher now becomes resistance in the past 4 sessions, and that is a concern for me, the fact that Friday's rally has hit that resistance and started to fall over. So it just all points towards, I think, further pressure on this next key band of support, 42.20 area to 42.90, really important support on S&P 500 futures as to how the market reacts, because this could become a big top pattern. In front of that, though, it has to be treated as a trading range, but look at the negative bias on the momentum on that daily chart, on the 4-hour chart, again, still negative bias to momentum, still suggests selling into strength. So again, suggests retesting of that key support area. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where we'll be looking at the ADP employment data, which could set us up nicely for the payrolls on Friday. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.